Rosneft's profits collapsed by 70% in 2025 amid sanctions and oil price turmoil. But the story doesn't end there. Russia's state-backed energy giant Rosneft has been hit hard in 2025. According to the company's IFRS financial report released Friday, its net profit fell a staggering 70% year-on-year during the first 9 months, a plunge that's sending shockwaves across the energy sector. Between January and September, Rosneft recorded a net profit of 277 billion rubles, about $3.6 billion, compared to 926 billion rubles, $11.9 billion, in the same period last year. The slide reflects not just falling oil prices, but also a tightening web of sanctions that continue to pressure Russia's energy exports. Revenue took an 18% hit, falling to 6.28 trillion rubles, $80.8 billion. Meanwhile, EBITDA, or earnings before interest, taxes, depreciation and amortization, dropped 29% to 1.64 trillion rubles, $21 billion. But here's the part most people might miss. The pace of decline intensified as the months went by. Rosneft's net profit dropped from 170 billion rubles in the first quarter to 74 billion in the second, and then to a mere 32 billion rubles, $411.6 million, in the third, an 80% plunge compared to late 2024. That's a brutal trajectory even by Russia's volatile energy market standards. Natalia Milchikova, lead analyst at Freedom Finance Global, pointed out several key factors fueling this downturn. Weakening domestic oil prices, a widening gap between Russian and international crude benchmarks, new sanctions targeting the tanker fleet, and even the strengthening ruble, which hurts export earnings. These elements combined have cornered Rosneft in a high-cost, low-return environment. One particularly controversial issue, Rosneft's latest report omitted critical cash flow data, figures that typically reveal how much money a company generates and spends through operations, investments, and debt. Alpha Bank analysts flagged this omission, noting that earlier reports for the first half of 2025 did include partial cash flow disclosures. During that period, Rosneft had posted 916 billion rubles, $11.8 billion, in operating cash flow but used nearly all of it for capital investments, 760 billion rubles, and loan repayments, 135 billion rubles, leaving a negligible 22 billion rubles, $283 million, in reserves. So why is the company suddenly withholding these details? The move has sparked skepticism about the transparency of Rosneft's finances. In the third quarter, when data transparency declined, the company surprisingly reported 418 billion rubles, $5.4 billion, in free cash flow, but never explained where this influx came from. Alpha Bank commented that without full disclosure, it's virtually impossible to cross-check or reconcile management's claims. Rosneft CEO Igor Sechin attributed the disappointing results to a deteriorating macroeconomic environment. In his statement, he cited falling oil prices amid excess global supply, rising tariffs on natural monopolies, inflation-busting security expenses, the central bank's elevated key interest rate, and the ruble's unexpected strength. In other words, nearly every macroeconomic lever seemed to move against Rosneft in 2025. Yet this raises a larger, more contentious question. How much of Rosneft's troubles stem from external sanctions and market conditions, and how much from internal inefficiencies or opaque financial practices? As sanctions bite deeper and oil markets evolve, Russia's flagship producer may find itself forced to adapt faster than ever before. A call for transparency and reflection. Rosneft's steep decline underscores broader risks in Russia's resource-dependent economy, an economy still deeply intertwined with geopolitics. Investors and analysts are left wondering, is this a temporary setback, or the beginning of a structural unraveling in Russia's energy empire? And perhaps the most pressing question, should global markets trust financial reports from major state-backed corporations when transparency itself becomes a political battlefield? Share your thoughts. Does Rosneft's financial silence reflect strategic caution amid sanctions, or something more troubling beneath the surface?